So this is a simple video about what is a stock split. I try to explain this with an example. So let's assume we own 100 shares of a company. And before the split, stock price is $100, number of shares we own is 100, and all in all, we have $10,000. So the split, let's assume we split 2-to-1, and there are other ways to say this as 2-for-1, 2-to-1, etc. And split can be any number of shares, so 10-to-1, 5-to-2. I mean, it just up to the company to decide whatever split that they actually want to go with. Now, after the split 2-to-1, as per my example, the price will be adjusted. It's an automatic adjustment, and the stock price, because it's 2-to-1, will be halved. So $100 divided by 2, that's $50. And then the number of shares we own will double because it's 2-to-1, and it will go 100 shares times 2, 200 shares. So all in all, we're going to have $10,000. That's $50 per share at $50 per share, and 200 shares. That's $10,000. So before versus after the split. Well, before we had $100 per share, 100 shares, $10,000. And now after 2-to-1 split, you have $50 per share, 200 shares, still $10,000. So what's the net effect? Nothing. And why do companies do this? Well, some investors may find expensive stocks less appealing to invest due to high price per share, so clientele effect. Company may be trying to send a signal that they expect stock prices to increase, although this actually can be a false or a true signal. So we really have no way of knowing. And that's about it. Thank you.